this point in time.
Nick Curtis there, the Executive Chairman of Lynas, and joining us now in the studio is the Managing Director of NAOS Asset Management, Sebastian Evans, and Glenn Corporal from The Australian. Sebastian, great to have you on the show. I know resource stocks are ones that you don't invest in, but I know you've sort of been following the Lynas story and this stoush with China. It's obviously been good for the stock short term. What do you think long term, I suppose?
Yeah, long term it's interesting. I think why we tend to steer away from resource stocks is their dependence on obviously commodity prices. But as Nick said there, with a resource such as rare earths, where it's so concentrated, such a small market, and is such a very small market that gets so much airplay, I think you know, it opens up inherent risk to pricing volatility, and especially when China controls 90% of the market. But I think it's also interesting, when the price was so low, you know, even 2 years ago, it was very marginal for a lot of these producers to really make any money at all. And you've seen that change. And I think you'll see in a number of years, we've seen a number of these companies, smaller exploration stocks. They're called rare earths, but they're actually not that rare. And you'll see that you know, the market go almost into extreme surplus, like you've seen with a number of other commodities. You'll probably see it with iron ore and a number of other commodities in a few years' time. And it'll be interesting to see how it plays out. But I think, you know, the market does need more producers. You've got Molycorp in the US, and you've got Lynas Corp now, and I think you'll see a few more start to come online over the next sort of 3 to 5 years.
I just think it's kind of interesting, you know, if we bring it back to the sorts of stocks that you look at, which are more in, you know, healthcare, biotech, technology. With things like this, though, it kind of points out, it makes you see the impact of government regulation, of intervention, and from where you sit, that's another interesting perspective. You know, particularly in, say, healthcare stocks, you know, you see one drug given the go-ahead or not, and, you know, it's a huge impact.
It is, and I think it's very hard to risk when you're trying to model or value a lot of these businesses. But I think when it comes to when you've got all your eggs in one basket, and as China's got so much control over the market, I think that's a very different situation. I think for healthcare companies and you know, life sciences and whatnot, I think it's different when you develop a drug to, you know, save someone's life, or even give them another few years of extra life. I think people will pay for that. I think the more issue in that space is really coming down to, you know, governments having the ability to fund these programs, you know, Medicare and whatnot. You're seeing in the States there's big changes there because they simply can't. In the States, it costs them an absolute fortune to run these programs, and that's the risk, I think, for that side of the, you know, the industry.
It's interesting with the on rare earths. The Chinese government, I think maybe going back to Deng Xiaoping, actually selected rare earths as something that they wanted to make sure that China had a sufficient amount of supply of. So it's interesting that it's only recently that the US and other countries are going, well, we perhaps, you know, blaming the Chinese for keeping their supplies to themselves, maybe stockpiling, and maybe, you know, other countries should have themselves had a little bit of more advanced strategy in terms of the rare earths. And I suppose if there's a stash between China and the US and the WTO, I think I'd back China, because I think they know ways, even if they sort of say they have to export more, they'll work out other ways of getting around it. But I mean, clearly what Sebastian's saying is right. Other companies will have to come in, but essentially Lynas is a trading stock, so it's obviously volatile. It's volatile, and it's volatile to sentiment, supply and demand. So I think that's the interest, but it'd be interesting to see if other companies do come into the market, and in which case the price will actually be very volatile, and I suppose some people will make money, some people will lose money.
Yeah, well, Sebastian, you run a hedge fund, so that's obviously what you do, but I want to, before we look specifically at your fund, just get your thoughts. We were talking with our guests earlier about what we've seen on particularly the US market this week, and the not as stellar performance here, but the rebound that we're seeing in investor confidence in the States. What's your reading of it?
Yeah, look, I mean, from our market, I think it's an extremely bullish you know, point of view, something that's been waiting to happen for a long time. I think the issue for our market and why we continue to lag is the Australian dollar. I think if you're, you know, the largest investors around the world are international investors, and I think they continue to look at Australia, and a lot of the conversations we have is, you know, a number of these stocks look relatively cheap to their peers, but I think relative, you know, in currency terms, the Aussie dollar kills them. You know, if a stock may rise 30% and the currency drops 30%, and net, you know, it really wasn't worth your while. And still, until that changes, I think you're going to see more money flow into deep value cyclicals, and especially with a low US dollar, the leverage to the upside in European and US stocks is huge for these investors, and that's where you're seeing most of the money flow out of bonds and into equities based in the States.
And but your fund is Australian equities only, is that right?
It is.
And so are you cashed up though? I mean, are you perhaps sitting out for?
We're different. We're very long-term investors. We invest in small and sort of tend to invest more in small and micro-cap businesses. So we tend to take a 3 to 5 year view. So it's very different for us. But I mean, we do run a more trading fund in the liquid stocks and the larger stocks, so the banks and resource stocks, which makes up 70% of the index. And you're not seeing the flows into those stocks. So we tend to steer clear from a lot of those things. We look for very stock-specific examples, and I think you see a lot of market commentators stating, it's a stock picker's market, and has been for a while. And I think unlike the bull markets, 3 or 4 years ago, where the tide rises and everyone rises with it, I think you'll see the tide won't fall, but I think it'll sort of stagnate. And a lot of fund managers are not getting performance simply by holding index stocks. They really have to sort of think outside the square a little bit and try and push the boundaries. And Australia's not very known for that a lot of the time.
But it's tough for you as well, because your strategy is to try and find stocks now that might be the next Cochlear, but you're talking 3 to 5 years. So how difficult is it for you in this kind of environment to get investors on board when you're saying, look, we're not promising you anything for quite some time. This may or may not work.
It is, and I think we've developed a track record of, picking a number of these stocks that have been quite successful. I think we've also had a number that haven't been as successful. But I think, Australia's got a great record of, founding some of these technologies. A lot of them have really been, taken over and taken back overseas. And I think, but what you're seeing now is a lot of these technology companies are a lot more later stage. They're fully funded, and they give investors a lot more upside in markets that are real and are large and have a need. And they're not as reliant as on a commodity price or bank funding or mortgages.
We're just going to take a short break, but after that we'll come back. We've got plenty more with Sebastian, plus the Australian's John Jury with his take on the week in business. Stay with us.
At Sage, we have over 6 million customers, and that makes us the leading global supplier of business management solutions for companies with up to 1,000 employees. Our integrated ERP and CRM solutions power mid-sized and larger businesses, including manufacturing, distribution, construction and services. And our cloud-enabled solutions grow with your business. With credentials like these, we must be doing something right. So call us on 13 Sage.
Whether you're after blockbuster movies, exclusive series, or the biggest special events, Movie Network channels offer you more of what you want when you want. Movie One delivers premiere movies 3 nights a week, uninterrupted, in awesome HD. And with Foxtel IQ, you choose when you want to watch. Savvy. Movie One, just one part of the Movie Network channels package. For value and variety, it's altogether better. Upgrade now.
This Olympic Games moment brought to you by Foxtel, official subscription television broadcaster of London 2012.
Twice, Libby Trickett went to the Olympic Games as the world record holder in the 100 metres freestyle, yet it was in the 100 fly that she won her sole individual Olympic gold medal. Qualifying fastest for the final, Trickett flew off the blocks and held a half-second lead over teammate Jessica Schipper at the turn. Trickett kept her composure in the closing stages, beating home Christine Magnussen of the United States, with Schipper claiming bronze. It was just reward for the popular Aussie, who missed gold in the 100 free by 0.04 of a second. After retiring in 2009, Trickett has returned to competition and will be chasing more gold in London 2012.
Seeing is believing. The only place to see the games live, in full and in stunning HD is on Foxtel.
Back to our panel now. The Managing Director of NAOS Asset Management, Sebastian Evans, joins us with Glenda from The Australian. Sebastian, we have to ask you then, you're pretty high conviction, you look at the smaller end of the market. What sort of stuff are you buying at the moment?
Look, we're looking at the smaller end of the market because we find the top end just there's no growth. I think investors need to really look at EPS growth, and that's where you get your higher multiples. So we're looking at very stock-specific things, interesting businesses. We're looking at the data centre theme, so everyone's moving to the cloud, so we're trying to play the data centre space because this all needs to be stored somewhere, so things like NextDC and Macquarie Telecom. We're looking at more very stock-specific life science stocks, like a stock called Riva Medical that's developing a biodissolvable heart stent, of all things, so moving away from metal heart stents. And they're the themes that we really try to concentrate on, because I think a lot of investors we're seeing, a lot of bigger investors are saying in the big stocks we can't get any growth, we're just investing for yield. So we're trying to diversify out a little bit more and look for the smaller, more micro, more liquid and riskier stocks. to try and get that alpha, because we just haven't been able to get it for the last 5 to 7 years.
A lot of the mums and dads and superannuation funds are going for the stocks with, you know, such as the banks, something like that. They get the dividend imputation benefits. I mean, are the banks overpriced? Are there too many people in these sort of big stocks?
I think Australia's always tend to be very attracted to those larger stocks, BHP, CB, all the household names. And I think to an extent you need to have a core holding. I'm not saying our portfolio is only for a small section of anyone's financial wealth, but I think at the end of the day, if you're getting 8% fully franked, that's fine, but you don't need to hold a basket of stocks. And especially when you look at the Australian housing market, I'm no expert, but I think, as we've seen in Europe, banks are not as safe as what a lot of people make them out to be. So I think as long as you have a very diversified portfolio, I think you still need to own, small caps as well as some of these larger stocks.
So how do you diversify out the risk in your portfolio? We were talking about some of the risks before from, legislation, regulation. How do you make sure that your eggs aren't all in, one basket, say, in health sciences?
Yeah, and I think we've got internal limits on
You're
what I
not
suppose.
in breast implant stuff, for
yeah,
example,
exactly. No, we haven't seen one. So, we've got internal sort of rules and whatnot that we have to adhere to, but I think at the same time what you find with a lot of these businesses, they're only as good as, the 1 or 2 people that manage them. So we'll meet with, 500 businesses a year. It's more like a VC fund except listed. So I think if you can get a really close relationship to these people and see what really drives them, because these people are very passionate about their businesses and they give everything to them, you find. If you can get that relationship and that rapport, you understand a lot more, as opposed to going to a BHP, investor briefing, with the IR and the MD. I think it's much harder to play. It's all about market inefficiencies, and those stocks are much more efficiently priced than a lot of the smaller ones where there's not a lot more, your investment bankers and whatnot can't make money out of these stocks, so they tend to leave them for the smaller fund managers.
In the past, there's been a sort of steady flow of IPOs coming to the Australian market, which has also provided people with an opportunity to invest. Are you seeing any? I mean, it looks like there's not that many coming to the market at the moment.
I saw one this afternoon, actually. It's very similar to ResMed. It's quite large. But I think what you've seen, a lot of the IPOs that have come to the market have been from private equity. I think you've seen Collins Foods, that listed at $2.50 and now it's $1. So I think people are very wary of...
Maya?
Maya. I mean, the private equity list.
$2.29.
I mean, the list is huge. So I think there's no real need from our perspective, because I think, it may look attractive, but I think you really need to get a track record first. And there's been very little aftermarket support besides QR National, which a lot of the international investors got right and the domestic guys got wrong.
All right, interesting year, Sebastian. Thank you very much for coming on.
Thank you.
Good to chat. Now, here is John Jury with his take on the week in business.
Greetings. Well, it was certainly fitting that Peter Costello provided what hopefully is the bookend to the fracas over the Future Fund Board. The process is meant to be apolitical, and a politician in Costello came out swinging, attacking the government for the